What's going on, everyone? So, absolute destruction in the overall stock markets today. If we talk about the market as a whole, I don't, very, very hard to find any stocks that were green on the day, um, let alone, up big on the day, right? So everything was pretty much down today. What we're looking at here is the SPY ETF, right? So this is the S&P 500. We were down 3% and $12.41 on the day. So if we kind of just look at these past, 3 or 4 daily candles here, starting with this significant red elephant bar candle here, you can see as we came down and lost this 50-day moving average here, big level. So one thing that I kind of do want to point out, and this is not just for day trading, but this is also for people who like to swing trade, people who have long-term portfolios, especially people buying the dip. If we are trading or lose the 50-day moving average, we do not want to be going long. We do not want to try to be looking for a bounce below the 50-day moving average, especially if you're swing trading. Now, intraday scalps, can you maybe catch a 5, 10, 15-minute play? Of course, you can definitely trade that to the long side, but you have to understand when we are below big macro levels of supply, like the 200, the 20, the 50-day moving average, those bounces can be pulled at any point in time. You're not going to get that much follow through. So it could be, a lot of times you enter into these plays, the play starts to work in your favor, and then it kind of just stalls. You ask yourself, you're thinking to yourself, like, what's going on, man? The setup was perfect, the market was bouncing, and then all of a sudden it just stopped. That's what happens when we're trading below supply, and supply is big as a 50-day moving average. So if we can kind of just look here, 421, when we got our first close below the 50-day moving average, we broke through this channel line here and this distribution action, and we put in a significant selling day on the 22nd. Yesterday was a very, very odd day, very choppy for the market being green yesterday. Didn't really feel like it intraday. I traded the market long and I traded a little bit short yesterday. Didn't seem like there was a whole lot of follow through, and then come the end of the day, the market was green, right? It didn't really feel that, it didn't have that feel good feeling. You know what I'm saying? And when you get that feel good feeling, when everything's running, everything is moving together. The dips come in to support and they bounce, go higher. They come in, dip to support, bounce, and go higher. Yesterday kind of felt very, very, choppy. What I was actually looking at coming into today is if we were to take out yesterday's highs, then potentially we had room to come into this 5-day moving average. That price was around $430. If that wasn't going to happen, we could definitely have seen some follow through on like a day 2 bounce here. Pretty much from the word go, market just completely got destroyed. We took out not only yesterday's lows, but the low wick of yesterday, and now we are approaching these prior lows from March the 8th as well as the 14th. In the after hours, we are down a little bit more, as low as $413, currently trading at $414 right now. So I'm not really going to get into the smaller time frames just due to the fact that it's after hours, but we are a little bit lower than the close now. The next area on the S&P 500 that we absolutely need to hold is $410. That's going all the way back to this intraday reversal. We had if you can remember this trading day, and I remember it specifically, we had a huge flush intraday, followed by a mega reversal, not only to engulf all of the day's losses, which actually finished green on the day and then went on a little mini rally here. So the $410 area is definitely going to be a line in the sand that you're going to want to take notice on. What you're really looking for going into tomorrow, if you are looking to trade SPY, is if we do get some type of bounce, you are going to need to hold the after hours lows. You're going to need to hold the pre-market lows. If we do start to break those pre-market and today's after hours lows, and we start testing this $410 range, you're going to need to get out of the trade if you are bouncing long. If you are just looking for some sort of bounce and you kind of want to play it safe and kind of wait to see if we're going to have more selling, let the market bounce, whether it be a 1 or 2 day bounce, and you feel like not taking part in that bounce, that's completely fine. But if we do get down here to this 410 area and we lose this 410 area, this is an easy short position here for the next leg down. You can definitely throw on some short positions there. if you are having a long-term portfolio where you're kind of holding a bunch of stocks in your portfolio and you're tired of seeing them bleed out and just continue to bleed out. If we do lose the 410 area, you can definitely hedge those long positions with taking a couple of couple of puts on the SPY, maybe going 1 or 2 months out, just kind of holding those. As long as we're drifting, you're going to kind of want to hold those in protection of your shares and kind of lock in the profits along the way. I hope this helps. If you guys are looking to get a little bit more serious with day trading and you're looking for a strategy that you can use the first 1 to 2 hours of the market open, first link down in the description box below. I give you a strategy where I go over how to trade the market for the first 1 to 2 hours of the day, whether you're trading stocks or options. It's completely free. It's 30 minutes. It's a good little training and a good little guide. You guys can get it for absolutely free. If you guys want to trade with me each and every single day, along with the rest of the guys on my team, definitely join our Discord. That link is down in the description box below, and I will see you guys all in the next video.